Hey YouTube, a few days ago, Jeremy on his second channel, the Financial Education 2 channel, talked about his 385,000 stock market account and he disclosed his positions in that account. In this video, I want to give my thoughts about his account and his stock positions and what they are likely to do going into 2020. It was not too long ago that Jeremy was actually attacked for giving stock recommendations on his channel. It was pointed out by Michael J that many of his stocks had not done well. But Jeremy is having the last laugh now. In a recent video, Jeremy disclosed that his 1-year rate of return was an incredible 47.12%. In a recent video, I covered Jeremy's performance return and the performance return of some other portfolios. Take a look at that video if you're interested to know what are the best performing YouTube portfolios. In the first part of the video, Jeremy talks about the stocks that he has sold out of in 2019. Some of the stocks include United States Steels, Whirlpool, Tapestry, Nvidia, Nordstrom, Intuit, At Home Group, Callaway Golf, Elf Beauty, Cirrus Logic, Alibaba, and Apple. I think he has sold out of his position completely for Alibaba, while he still holds some shares of Elf Beauty. He's also sold out completely in some of these other stocks. I think it's a pity that he sold out of some of these stocks. I think Baba still has a multi-year or even a multi-decade growth trajectory. Apple has had tremendous gains this year, so he's probably lost out on some of those gains. Intuit is actually another good company, and I'm not sure what was his reasoning for selling out of it. I do not own Intuit myself though, because I think they are better investments, and so that may be one of the reasons Jeremy decided to sell out of it. For my portfolio, I have not sold a single share throughout the year. I'm quite careful when I buy a company, and I generally tend to hold that company for many years. I don't think the story behind that company will change within a span of few months. So I'm very comfortable in holding the shares that I buy for many years. Also, I don't want to make the mistake of selling out of a company which still has many years of growth left in it. For example, Alibaba, I think, is a stock that has many years of growth left in it, and so I will not be selling any of my shares anytime soon. In the next part of the video, Jeremy discloses all the stocks that he is holding in his portfolio going into 2020. He has Cirrus Logic, he has Elf Beauty, Facebook, National Beverage, iRobot, Skyworks Solution, Tesla, of course, Uber, and Wynn Resorts, for a total stock portfolio value of about 385,000. There was no percentage breakdown, so I decided to put one together. So this is a snapshot of Jeremy's stock portfolio with portfolio allocation displayed as well. So you can see that Facebook is his largest holding and makes up nearly 19% of this portfolio. Facebook is a big holding for me as well in my portfolio, but it makes up about 15% in my portfolio. Perhaps Jeremy has greater conviction in Facebook, and that's why it has a greater weightage in his portfolio. Up next is Skyworks Solution at about 17%, Cirrus Logic 15%, Tesla at 13%. iRobot, I think, is a newer position for him, and that has come up to about 10% so far. I think Uber is also a relatively new position for him and has come up to about 8%. Then he has National Beverage at about 8%, Wynn Resorts at 6%, Elf Beauty at about 4% now, cash almost negligible. So you can see that Jeremy is quite concentrated in his stocks portfolio. Jeremy's top 6 positions, which are these positions, make up nearly 82% of his portfolio. So that's a lot of concentration. The portfolio will move up or down based largely on the fates of these 6 stocks. So let's take a look at these stocks in a little more detail. Skyworks Solution has been a great buy this year. It's done 44% compared to 30% plus for the Nasdaq and about 26% for the S&P. But if you look at it over the 2-year period, the story changes. Skyworks Solution has basically gone nowhere over the last 2 years, while the indices have performed reasonably well. Skyworks Solution is not a very easy business to understand. It is a semiconductor company and it manufactures semiconductors for use in all these devices and equipment. However, to really buy into a company, I need to understand the product very well. What are the competitive advantages? What is the growth trajectory? Who are the competitors? And how this company has a greater moat than its competitors. I have a hard time understanding that for a company like Skyworks Solution. I'm not sure how Jeremy can understand it so well. So though I agree with Jeremy that the semiconductor industry is a growth industry, but I think the safer way to play this industry is through the ETF. The ETF will also have competitors like Nvidia, AMD, and of course the big giant Intel. So one good ETF to play the growth of the semiconductor industry is probably PSI. PSI comprises of about 30 US semiconductor companies. The performance of PSI has been very good this year and over the last 10 years as well. This year is done about 38% plus and over the last 10 years is done about nearly 20%. These are the stocks that comprise this ETF. So it has a mix of large cap, small cap, medium cap, and other types of companies. These are the top 10 holdings. You have Nvidia, you have Intel Corp, and you have some other familiar names like Broadcom, Qualcomm, Micron, and Texas Instrument. So, as mentioned, PSI has done nearly 40%. It is not very far off from the performance of Skyworks Solution. In fact, over a 2-year period, while Skyworks Solution has gone nowhere, the PSI ETF has still done 24%. So you have a more diversified exposure to the semicon industry, you have less risk, and you have better performance. Cirrus Logic is another semiconductor company that Jeremy has in his portfolio. For the same reasons that I do not invest in Skyworks Solution, I would probably not invest in Cirrus Logic. It is just too hard for me to understand its business, its competitors, and its moat. Over the last 2 years, Cirrus Logic's performance has been about 43% compared to about 24% for the ETF. So a do nothing, know nothing semicon ETF did reasonably well, and I didn't have to really dig deep into understanding Cirrus Logic. Jeremy's next big stock is Tesla, and Tesla has been a good stock for Jeremy, and he picked it up at a good time and he has done reasonably well in it. But year to date, Tesla has really gone nowhere. It's only done a meager 6.39% compared to the indices. The story doesn't change much compared to the record for the indices over a 2-year period. In fact, the performance is even lower at 4.7%. So, Tesla is kind of stock that you have to be very good in timing your purchase. I do not own Tesla because I feel over the long term there will be a lot of new competitors that will crop up, and there will also be leading electric car manufacturers. So Tesla to me is a good company and I like their vision, but I don't feel comfortable owning it because I foresee a lot of competition. Jeremy's next two biggest stocks are iRobot and Uber. So I believe Jeremy sees these plays as deep value investments at the moment since they have fallen so much this year. The performance of these companies has been terrible this year in a great market where the indices have risen more than 25% plus. Over 2 years, the results is not very different. These two stocks have performed miserably. I believe iRobot and Uber will go up a little from here, but to me, they are hard to understand. iRobot is a leader in home robotics cleaning equipment, and I respect the company quite a bit. But I also hear reports of a lot of knockoff products that can perform a similar function. So the product seems a little commoditized to me. It's hard for me to understand if there is a real moat to that company. For Uber, I can see the progress, and of course, they are a pioneer in the ride sharing market. But a lot of competitors have also cropped up, and it's hard for me to see if Uber will continue to be a leader in ride sharing. Also, they are going up against a big industry, the taxi industry. In a recent community post, I shared some thoughts about Uber. So, Uber's valuation right now might be attractive. But I compared Uber against another startup and disruptor called Robinhood. Robinhood was a pioneer in zero commissions. It was the cheaper option, just like Uber was the cheaper option in transportation. But Schwab, TD Ameritrade, and the other big brokers did not just sit back and let Robinhood steal their lunch. They scrapped their commissions as well. So I think the taxi industry is not going to let Uber steal its lunch forever. They will lower their fees or they will come up with more innovative solutions so that they can offer better competitive pricing as well. So it's hard for me to understand if Uber really has a strong moat. Furthermore, the network effect that Uber has is very localized. It is not similar to the network effect that a company like Facebook has. Every one user that joins the Facebook network is beneficial to another user anywhere in the world. But if one taxi driver decides to sign up for Uber in New York, that only benefits commuters in New York and not around the world. I rather own a higher quality company like Facebook than take a risk for a turnaround in the stock price for a company like Uber. So those are my thoughts on the stocks in Jeremy's portfolio. It will be very interesting to see how this portfolio performs over the next 1 or 2 years, and I will be watching it closely. Can Jeremy perform his same magic that he did for Tesla with other beaten down stocks like iRobot and Uber? We have to follow his portfolio over the next 1 year to see how it turns out. So that's it for this video. If you enjoyed it, please smash that like button. I have some interesting updates about my eToro account, and I will give you those updates in a future video. Thank you for watching and have a great day.